It's Market Day Report. Welcome to a Tuesday, and thanks for allowing us to be a part of your morning. Speaking of part of this morning, I kind of sound like I'm teeing up a breakfast cereal, right? Well, coming up in a moment, we'll talk about more of the items you might have for breakfast, but let's start with corn. I guess we could say cornflakes, right? July contract at $4.37 3/4. That's a half penny lower. This is yellow number 2 corn. I don't think you'll be eating yellow number 2 corn. $4.37 3/4 on the new crop. That's trading 2 pennies higher. Now that's corn. What about soybeans? Soybeans, that November contract lower 4 consecutive sessions. 10.20.5 is where we trade this morning. That's 3.5 higher, but look at the old crop contracts, anywhere from 3.5 to 5 3/4 cents higher. We'll touch on soy meal. Meal has been down 2 consecutive sessions. We are moving in higher territory. And then soy oil has been lower 4 consecutive sessions. Look at the July and August lows, though. We've touched 45 on both of those, but now nearly every contract in that 46, upper 46 cent range. Wheat market, what's happening here? Well, we're giving back some of the gains from this week as the July contract is $5.35. That's down 4. We go to hard red, which has been higher for 4 consecutive sessions, and it trades $5.34.5 off 5 1/4 cents. And then Minneapolis December new crop, deeper loss here, 9 1/4 lower, $6.47 3/4. Finally, over to the cotton market, and it's lower, 68.14. It's down 55. You know, our in-studio guest today is Chris Swift. Chris is with Swift Trading, and, you know, we start with the row crops here, Chris, and, you know, corn down 7 consecutive sessions. November beans down 4 consecutive sessions. And then the wheat market, we've seen some strength there. What are your thoughts?
Well, look at it. We lost about 20 cents in the corn, about 40 cents in the bean market, and really all it did is put it down above previous lows. If we look down to 430 level, so it's been lows that we've seen quite a bit in the December contract. I think right now we got the crop progress out there that we're looking at that's just not quite up to what they were seeing before. And then we look at other things like, well, what are we going to do with our biofuels? And that we got a ding a couple of weeks ago from that the EPA did not give us as much of the biofuel part of it that we wanted to. So now we're kind of struggling with that. But as we see energy starting to perk back up a little bit, even after OPEC increased production by 400,000 barrels a day, they still were able to put almost $2.50 on it yesterday and up almost another 50, 60 cents today.
Well, and then you look over at the soybeans, and wow, look at that chart. That's the 6-month chart. And even though we've got peaks and valleys in there, really we've been trading within a range.
Yeah, and the oil is probably, the bean oil has been the one that's been the mover of it, because we've seen meal, it has literally died. It went down there right at that $300 level, and it hasn't budged because most of the demand for the soybeans has been the soybean oil. So you have to crush it. You're going to get both. Makes for a little bit of an excess for the meal, but not quite as much for the oil.
Yeah, and when we talk soy oil, again, we got up to that 50-cent range, and then, well, we fell. We went locked limit lower on the soy oil contracts, again, tied back over to what appears to be those SREs, the small refinery exemptions under the RFS.
Yep.
So, again, as we're building back, we're still a ways away.
Yeah, absolutely. And still got a little bit more of the bean crop to go to get planted in the ground. Of course, here in the southeast, we had some flooding, so we'll probably either have some replants of that, or as we finish harvesting wheat, we'll get a second crop in as we can finish harvesting wheat, too.
Okay. We'll come back, and when we do, something you like to talk about, and that's livestock. So that's right around the corner. Market Day Report continues in a moment. Protein sector has been hot here in 2025. You know, this next market has gained 23.7% here year to date. What is it? It's the hog market. Look at this. We're lower on the front 2 months, but higher from August and beyond. Now, even though it's down 35, that front month June trading at a $0.50 higher than 100. That's hard to say. $100.50 a hundredweight. We're back to 2 penny gain on the July at 105 and then 105.95 on the August contract. And some have set some sights on maybe 107 for that August contract, maybe not too far away. What about feeders? Feeders, clearly 300 is no big deal anymore. August, 303 and a quarter, $1.50 higher on September at 302.45, and then the October in that 300 range as well. And then we drop over to live cattle futures. June contract, $1.20 higher, 217.75, and the August at 212.35, $1.35 higher. And our in-studio guest is Chris Swift with Swift Trading. And Chris, I'm looking at a couple of things here. First off, June live cattle. It's got to converge end of the month with cash cattle. We're making some moves that direction, but who appears to be winning right now, cash or the futures?
Well, cash, because cash is still trading at the all-time highs right here. And probably no futures trader wants to run that board up equal to it because they would be sold on too heavily. Why would I want to assume the risk when I can get someone else to assume it at that level? Which brings to a great point of something that took place this week. The CME has raised their price limits. So instead of raising margins, which margins is a performance bond on the contract and tends to be raised when the value of the contract rises. So we've got a much more expensive contract out there. We want to raise that performance bond. But what they did was they raised the price limits. Price limits are an escape valve. If we build up too much pressure in there, we have limits, daily limits on them. We can only go to that limit, and then either the bids or offers start to stack up. By expanding those limits, you have more room to let that steam off before it gets bottled up there. So I find that interesting that here we are making new historical highs in the cash market, a really wide positive basis in the fat cattle market, almost dead even, if not slightly negative in the feeder market, and no real increase in margin requirements, but yet we're going to increase the price expanse on there, creating potentially a great deal more volatility than what we have already seen.
So in our first segment, we talked about going locked limit lower in soy oil a few weeks back and how that dropped 3 cents. And then all trade stopped. If you wanted to get out, you couldn't get out because it was it. That's it. Couldn't find anybody else. And we have seen some limit moves in the cattle. So now as we expand these limits, you really have to have a plan, don't you?
You really do. And of course, all it does is opens up everybody to risk. And when we look at the risk right now, we look at it towards the cattle feeder. We believe that the cattle feeder is basing his feeder cattle purchases on today's price of fat cattle, not what he can offset in the future, because clearly you can see he's got a significant discount out into the future. So there would be no reason to have to do that. And you can't make sense buying feeder cattle prices today and trying to offset them at that level. So it goes back to the betting on the come. We're waiting for that market to continue up. But it exposes that cattle feeder to the basis. I'm paying a $20, $30 higher price for the feeder steer, and I'm not getting that in the fat market. I have to wait out into the future for that to come.
Hey, by the way, for anybody who doesn't know, betting on the come, that's a reference over to craps, the craps table.
Yeah.
So, by the way, every time I've done that, I've lost. So, yeah, I can't play craps either. So, I better stay out of the cattle market and out off of the craps table. So, all right, Chris Swift is with Swift Trading. Always great to see you here.
Pleasure,
and
Tony.
Thanks for the information.
Yeah, absolutely.
All right,
it's called
Tim.
gambling for a reason. All right, thanks, guys.